Welcome to the Tesla Economist. Please hit the thumbs up and don't forget to subscribe. I like the saying, the bull goes up the stairs and the bear goes out the window, implying it takes a bull market a while for the market to rise, but in a crash, the market goes down fast. Despite the bloodbath we're seeing everywhere, this doesn't appear to be a market crash. The bull markets will keep going like an engine until it runs out of gas. Once it runs out of gas, then it crashes. But in the market, it's not gas it runs out of, but money. There's only so much to go around, especially when it becomes highly leveraged, like the way we saw in the global financial crisis, with mortgage-backed securities and CDOs, or collateralized debt obligations. A lot of the time, bull markets last long enough, we see bubbles form. Bubbles eventually pop, and if they were large enough, it can be enough to crash the markets, as so much credit is wiped out immediately, and it's often leveraged too, resulting in debt, and sometimes the debts are too big, governments have to bail them out, because the institutions are too big to fail. In other words, the music is still playing, we are still in a boom. The bubbles are brought on by herd mentality, people doing it because everyone else is. A lot of my friends these days are investing in crypto. I know these people, and I'm aware of their level of financial understanding when it comes to finance and money, yet here they are, showing me on their app how they just made 700% in a month, and they thought they were clever as a result. This gives people a false sense of confidence, and the next trade they make might be twice as big, until eventually they likely lose it all. But how can you determine a bubble? It's difficult with so much cognitive dissonance. People are only seeing and hearing what they want to. A lot of investors will only search on YouTube the bull cases and not the bear cases. They want subjective information to confirm their bias, rather than looking at it objectively. With Tesla, I try very hard to look at it through all sorts of scenarios and outcomes. I try to be honest with myself. Of course, if you have millions invested in something, you don't want to hear about a possibility of losing it all. Are there bubbles forming in the market now? You bet. I think crypto is the major bubble right now, and some of them are starting to drop significantly. Bitcoin seems to be holding the best, because the Bitcoin investors understand why it's unique, whereas most other crypto investors have just jumped on the bandwagon without a proper education in financial history. The thing is, this might just be a temporary adjustment that has spooked a lot of investors. When it recovers again, they might just jump back in. You see, although the bull goes up the stairs, sometimes the stairs go down for a bit too, as in along the way, there will be market adjustments, little reality checks, just to test the waters. Investors get spooked, the markets drop and adjust, in case it's going to crash. But then no crash comes, then it recovers, and goes up higher than before. It won't stop rising until it crashes. In the meantime, these adjustments often shake out investors with paper hands. Other investors, or traders, think they've got the hang of it too. Market goes up, market goes down, and buy and sell in between, timing the market, except when they get it wrong one time, and they're out too. There aren't many things more surprising than the irrationality of the stock market. The economy still isn't performing to its usual efficiency either since COVID. We're still seeing logistic issues, particularly when it comes to components. This can create temporary inflation, which scares the markets, as inflation can be used as an indication that interest rates will have to rise, which could result in crashing the market. But it is hopefully temporary, and the logistics will work themselves out. Adam Smith's invisible hand of the free market economy should fix that within time. As for Tesla, what with being so vertically integrated and the ability to adapt so fast to change, they're doing much better than all their competitors when it comes to the likes of chip shortages. If the market starts to fall too much, then the Federal Reserve will likely make some moves to prop it up too. But make no mistake, this still looks very much like a bull market. But be wary of potential bubbles. The EV industry was a bit tougher to bubble than bubbles in the past, as there are some significant barriers to entry, like trying to start an auto company. But we have other businesses taking various angles, trying to get a piece of the pie. QuantumScape trying to make solid-state batteries, Intel's Mobileye trying to do FSD, and we're seeing SPAC companies like Churchill Capital or Lucid. Lots of red flags there, by the way, in case you didn't already realise. Some of them are scams, and some of them possibly legitimately trying, but they won't beat Tesla, and none of them have bubbled too high yet. But crypto is looking dangerous. It rhymes a lot with the dot-com bubble. We thought e-commerce was going to replace retail. We had all sorts of e-commerce companies in various niches. They just needed to market them right. The same for crypto. We now think digital currency is going to replace fiat currency, and they can carve out a niche enough to convince people their crypto can be a part of the future. For example, there's even a cryptocurrency for dentists called DENTACOIN. Find a niche and market it. just like the dot-com companies did. Except none of these dot-com companies made any profits. In fact, some of them didn't even make any sales. Just like all these cryptos don't have any value. Bitcoin is real though. It can work as a store of value and medium of exchange. It is suitable to replace the entire financial system. We don't need a plethora of cryptos for various applications like dentistry or Internet of Things. We just need one properly decentralized currency that no one can control or inflate. It actually doesn't need to be backed by anything but faith from the people. A people's currency, not a government's currency. Bitcoin has the most credible monetary policy. That's what Bitcoin is backed by. Anyway, for those of you who are crypto traders, and as you follow Tesla, I'm sure plenty of you probably have Dogecoin too. Just be careful. But it would seem in every boom we do eventually see a bubble. But there hasn't been a major one since the GFC, with the US housing bubble. But often the market crash is a result of a bubble popping. In the dot-bomb crash, so many of these dot-com companies went to zero, from tens of millions of dollars or even 100 millions of valuation, right down to zero. And I think most cryptos will do the same. In the 90s, we had the Asian financial crisis, with everyone investing in Southeast Asia, massive developments in places like Thailand. It went too far and turned out to be another bubble and crashed, along with property prices all around, even felt in Australia. Before that, we had the Japanese property bubble, which crashed in the 90s. They say that at its peak, just the grounds of the Tokyo Imperial Palace were more valuable than the entire state of California. I've also heard that the Greater Tokyo area alone was worth more than the entire US. Looking back now, it seems obvious it was a bubble. Perhaps it's obvious crypto is too. We have the infamous Black Monday in 1987, spurred on by investors with the confidence of portfolio insurance, also known as put options. Basically, for as long as we are human, we will continue to have human emotions. We don't seem to learn much from the past, or we always seem to think this time it's different. Make no mistake, the market will inevitably crash, and most likely be brought on by a bubble bursting. And right now, to me, that bubble looks most likely to be crypto. There are various stages of a bubble. Displacement, where investors see a new technology. Then we see prices rise, resulting in a boom, attracting more investors. Euphoria kicks in as the prices start to skyrocket. Some people then start to take profits. Others think it may still go up twice as much. They know it will burst and never come back, and it's all about timing. But it can be hard to identify the adjustments with a crash. Then the prices start to decline and panic kicks in. But it's near impossible to identify what stage we're at. However, when it crashes this time, the governments won't have as much money to bail us out like they have in the past. The printing machines have been running red hot lately due to COVID. Eventually, the dollar will lose too much value. The ironic thing is, this time people might turn to Bitcoin as the currency. Anyway, personally, I can't see any signs that this is a market crash, although I wouldn't be selling either way. As we all know, Tesla has barely started as an auto company, let alone an energy, robotics or AI company. However, if I do start seeing some signs, I'm actually going to cover my Tesla position with some put options. Not my whole portfolio, just enough to make a significant dent in my mortgage, in case things got really bad. Thanks for listening, please hit the thumbs up and don't forget to subscribe.